Hi class, today we're going to be looking at chapter 5 and we're going to do some exercises with activity-based costing and applying overhead, and we're also going to look at spoiled units. So if you'll bear with me just a minute while I share my screen with you. Okay, so for some reason or another, I can't get this to share with you this morning. Hold on tight. Let me see if maybe there's something else I can do there. Let's see. Okay. Now, it looks like you're able to see your screen now. And so we're looking at exercise 518, and we're going to be the Feldspar Company, and we're going to be doing activity-based costing to apply our overhead. The types of activities that we're going to be applying overhead to are setup activities, machining activities, and other overhead. They've given you information about each one of the jobs. As you can see here, they've given you the units that are produced in each one of the jobs, the units that are sold, the materials for each job, direct labor that was incurred for each job, and they've also given you additional information about machine hours and number of setups. The machine hours and the number of setups are the way that we're going to apply our factory overhead to the activities for this particular problem. So our setups are going to be based on $20 per setup. That's how we're going to apply the factory overhead for our setup activities. And our machining is going to be based on machine hour. And so this is the cost per machine hour. And then they've given you the number of machine hours that were used in each one of the jobs. Also, you're going to have to apply some of the overhead based on 80% of direct labor cost. And then they tell you during September that jobs 280 and 282 were completed. They were completed and transferred to the finished goods inventory account. And job number 280 was also sold by the end of the month. And that job number 281 was the only one that was unfinished at the end of the month. So what they want you to find in the first requirement is to calculate the per unit cost of jobs 280 and 282. Well, I set this up as a table, and I went ahead and included job 281 in the table too, even though it didn't ask for the unit cost of job 281. And basically that was because it was unfinished at the end of the period. But I wanted to go ahead and include job number 281 because they are a part of the total cost of this period of time. And so, and other requirements, they're going to ask you about the cost that would go into work in process. So I thought it was important just to go ahead and put all three jobs down here. I started with the materials that were requisitioned, and in each one of these jobs there was no beginning inventory that they mentioned to start with. So we didn't have any beginning inventory that we knew about. So we just start with the materials that were added during this period of time. And all of these amounts were given. I created a total column to go with these, this table, so that you know that the total of the materials that were requisitioned was 14,130. It's important to know the total of the materials requisitioned because we need to know what goes into work in process. They also gave us our direct labor for each one of these jobs. And again, I just totaled up the direct labor. We would need to know the direct labor because that would end up in work in process. What you had to do is you had to figure out the setup cost and apply the setups to the overhead. And we do the setup, applying of overhead based on the number of setups in each job. So if we're working on job 280, then the number of setups were 20 setups. We would multiply 20 times the cost per setup, and that would tell us how much we are applying in overhead due to the setup procedure. So 20 times 20 is 400 that we would charge to our overhead account. Now I chose to leave these all separate. What you could have done is figured them up separately and then combined them all together to get the total amount that was applied to the factory overhead. But I thought it was easier and simpler for you to see that each one of these activities is contributing to your applied overhead. And so I wanted to show them separately with you. For machining, we would take the number of machine hours, and the number of machine hours for job 280 was 80 machine hours. You would multiply 80 machine hours times the machining per hour, and that will give you $408. For the other overhead, it is based on 80% of the direct labor. That was given up here. And so what you had to do is look at the direct labor for this job, which was 2,000, and multiply it by 80%. So 2,000 times 80% is how I got $1,600 as my applied other overhead. And then once you have all of your overhead calculated, you would combine all of the overhead cost with the materials and labor. So all of these costs are combined together to find the total cost of this job. Now, what they ask you for in your instructions is the per unit cost. So I had to take this a step further and find the per unit cost of job 280. And the way that I would do that is I would take this total cost and divide it by the number of units in the order for job 280. The number of units in this order was 200 units. So if we divide 9,138 by 200, it will give you your per unit cost. And that's what they're asking you to calculate in requirement number 1. Now, they did not ask you to calculate job 281 because it was unfinished. We'll wait till we finish the job and then we'll calculate the per unit cost for it in a similar manner. But it was not calculated because it was unfinished. But we did finish job number 282. And job number 282, we would have calculated in the same way that we did job 280. The only difference is that there will be a different number of setups for job 282, and that information is given here. The number of setups is 25. You would multiply it by $20, and that would give you the applied amount for the setups for job 282, which is $500. And for machining, we'd take 40 machine hours and multiply it by $5.10, and that will give you $240. For your other overhead, you take your direct labor cost, which was $800, and multiply it by 80%, and that will give you the 640. Then you combine all the costs together to get the total cost of job 282, which is 7,744. We would divide this number by the amount that we are producing in job 282, which is 100 units. So we divide 100 units into this, and that would give you the per unit cost for job 282 at $77.44. That's what they wanted you to calculate in requirement 1, was the cost per unit for job 280 and 282. And that's what we did there. And there's a second part of this where they wanted you to calculate the work in process. And so we would start with the work in process beginning balance, which was 0 because they didn't mention anything about any of these jobs being started in the last period, and we didn't bring any information forward from the last period. So the work in process has a 0 balance. We did add materials, and that materials came from the total that they had given us for each job. I just made that column there and totaled up all the materials. So the total of the materials is 14,130. That's what I get as a debit to the work in process for the direct materials. Your direct labor is the total of the labor that was given, and then the total of the labor was 7,400, which would also be debited to the work in process. Then the setups, the amount that was applied for the setup, we would add each setup cost all the way across, and the setups was $1,200. And so that setup would be added to the work in process account, because setting up the machinery is a part of applying the factory overhead. The machining is also a part of applying factory overhead. The machining total was 1,122, and that is debited to the work in process account. Your other overhead came from this total here that is debited to the work in process account. So again, class, setting up, machining, and other overhead are all a part of your applied factory overhead. I just broke it down separately so you could see how each one contributed, or each activity contributed to applying the overhead. So technically we'd have a factory overhead account out here, and the overhead account would be credited for the total of these activities, and then of course we debited it to work in process. Also, at the end of the period, we had completed job number 280. So notice that the total of job number 280 is credited to the work in process account, because we finished with job number 280 and we're going to send it to finished goods. We've also finished job 282, so it was also credited to work in process. So I'm thinking that part 2 was asking you to determine the balance in the work in process account, and to do that you would add up all your debits, subtract your credits, and what you're left with is 12,890. And I see I have a mistake here. So let me pull this out of here. The only job that was left here was job number 281. So I want to show that is job 281. But the total amount stays the same there. That is, the total ending work in process is only equal to this 12,890. So you kind of got a system of checks and balances here for you. Then they want you to prepare the journal entries reflecting the completion of jobs 280 and 282. All right, so both of these jobs were finished, and you can see how I credited each one of them separately. What I could have chosen to do is combine both of these together and credit at one time, and then we would debit our finished goods. And that's what I did here. So the total of these two jobs added together is $16,882, which would be debited to finished goods, because finished goods is an asset account. You're increasing the balance of finished goods, and then you're crediting your work in process for the total of these jobs, which was $16,282 together. Then in B, they told you that you sold job number 280 on account. Remember, this job we transferred to finished goods is now sold. And they want you to make the entry of the cost of that job first, which is kind of reverse of what I taught you in principles. Usually we put this transaction first and then this transaction second. I don't know why in this textbook they do that. It doesn't make any difference in reality. These are just kind of out of order from what you've been taught previously. And the cost of goods sold, and it looks like I got these off on the wrong line here, but the cost of goods sold is $9,138. So let me put that on the right line here. Catching some mistakes that I have in here. The amounts were correct, I just got them on the wrong line. So I want to fix that. Okay, so cost of goods sold now is showing 9,138, which would be debited. And so you transfer out of work in process by crediting this, and then you would debit finished goods. That became a part of this first journal entry. And then when you have sold the item, you get rid of your finished goods by crediting the finished goods, and then you would debit the cost of goods sold for what it cost you. There would be a debit to accounts receivable and a credit to sales for the marked up cost. And in this case, the marked up price was 150%. And they told you that right here at the end of this problem, the selling price is 150% of cost. So if the selling price is 150% of cost, I just took the cost and multiplied it by 150%, and that's how I got 13,707 that would be debited to accounts receivable and credited to sales. And that's all we had to do in this first exercise. So the next exercise we want to look at is exercise 519. And in exercise 519, they're asking us to create journal entries. And most of these you should be familiar with by now. So we've seen them several times in ACC 121. We talked about these types of journal entries, and I've gone over several problems with these journal entries. But in this case, we're creating journal entries first. And so we're going to debit the materials for the materials that are purchased on account. And what I did is I combined my direct materials and my indirect materials together, and that will give me the debit to the materials account of $113,300. Accounts payable would be credited because they said they bought these materials on account. In the B transaction, they issued some direct materials. It's important for you to know that direct materials are going to be debited to work in process. So my work in process is debited for the amount of the direct materials. My indirect materials, which are a part of the factory overhead, would become a part of the overhead account. In this chapter, they don't use factory overhead, they just use an overhead title, but it's the same thing. So if you hear me saying factory overhead, it's just because it's a holdover from ACC 121. The overhead account and the factory overhead account are one and the same. So when we had some indirect materials, they go straight into overhead. And the total of my direct materials and indirect materials are going to be credited to my materials account because my asset account is decreasing by $91,300. For your labor, they broke the labor down into direct labor, which would go straight into work in process. So work in process would be debited for $67,000. And then they broke the labor down into indirect labor, which becomes a part of your overhead. So overhead would be debited for the indirect labor as well as the indirect materials. And your work in process would be debited for your direct materials and your direct labor. For our labor transaction C, the total labor is credited to wages payable. This could also have been some kind of payroll payable, or sometimes they just call it payroll in this chapter. So the titles might look a little bit different, but they are liabilities at this point in time to the company that they have recorded. In D, there was some other manufacturing costs that were incurred, and it says that they all were incurred with payables, which means it's accounts payable that they're crediting. So I'm going to debit my overhead for the total amount of my other manufacturing cost, $46,200, and I'm going to credit my accounts payable. And then in E, it says overhead is applied on the basis of 110% of direct labor cost. Now, that says direct labor cost. So you have to go back and look at your labor and make sure you pick up 67,000 and multiply it by 110%, and that will give you the debit to work in process of 73,700 and a credit to overhead. This is how you would apply the overhead based on 110% of the direct labor cost. And for F, it says we finished and transferred to finished goods inventory $230,000 worth of work in process that we were working on. So we finished some goods, so we had to credit our work in process account for $230,000 and debit our finished goods account for $230,000. And in G, it says part 1 of G, finished goods costing $215,000 were part 2 sold on account at 140% of cost. And they want you to make the journal entry to record the cost of the jobs first, and then followed by the revenue from the sale. So again, kind of making the last transaction, or the transaction for G is not the last one, but the transaction for G is kind of backwards. But there are 2 journal entries that you would make. One to update the cost of goods sold for the part of the cost that we have sold. And up here it tells you that you have sold 215,000 of the goods. So this is the cost price of the goods that were sold is 215,000. You debit the cost of goods sold and credit finished goods for 215,000. Then you take this 215,000 and you multiply it by the markup, which was 140% of cost. So 215,000 times 140% will give you the amount that we would record for the sale. Accounts receivable is debited for 301,000 and my sales is credited for 301,000. This was the cost plus the markup. Cost was 215,000. times 140%. That's how I got the amount of the sale here. Then here's the last part, which we haven't talked too much about in this chapter. So I really wanted to do these journal entries as a review for you, but I wanted to bring home this last journal entry here that I think is important for you to understand. Once we are at the end of the accounting period, we will need to look at our overhead account. And so I've created a ledger account here. And we'll have to look at it to see if there was any underapplied balance left over in the overhead account at the end of the period, or if there was overapplied balance. And the way we do that is we keep a T account of our overhead, and we record all the things that have happened to the overhead account down to transaction G. And so we had some indirect materials that we recorded, and that came from the B transaction. This 88,000 was a debit to the overhead. We had a debit to the overhead for the indirect labor, so that's where I'm getting this amount. And then we had some other overhead that we incurred at 46,200. That's where I'm getting this amount. And then we had some applied overhead, which was the 73,700, which goes in here. And then what I did is I went ahead and I added up my total debits, because you need to know what your total debits are and compare them to your total credits to see whether there was an over applied balance or an under applied balance. In this case, our actual amount of our overhead that we recorded here in the overhead account was more than what we estimated. So because we had more actual overhead than what we estimated, we had an under applied balance by $50. So I took the total debits, added them together here, and because the debits were larger than my credits, I had a remaining debit balance, which we call that under applied overhead. And because we had under applied overhead at the end of this period, and the journal entry tells us that we want to close it to cost of goods sold, this $50 is the amount that I want to debit to my cost of goods sold account and credit to my overhead account to get rid of this overhead balance. So I had to credit it here, and I ended up debiting it to my cost of goods sold account. Because the cost of my overhead was more than I estimated, I have to add it to the cost of goods sold, because it will become a part of the total cost that we incurred for this month. So my cost of goods sold is debited because it's added to this. My overhead is credited for $50 because I want to zero it out. I want to close it at the end of the accounting period. That's what they're telling you to do in transaction H. And so that's what I did there. Now in part 2, they ask you to prepare a T account for the overhead control, and that's what I did. And they told you they wanted an ending balance of 0 because we're closing out the account, or they want to know what the ending balance is. 0 is the ending balance. Once it's been closed. In part 3, they want you to prepare a T account for the work in process inventory. And right here, they're telling you that they had a beginning balance. You might remember that, well, this is not the same problem, but they told you that they had a beginning balance here, so you had to put that beginning balance in first. And then what you would do to your work in process, you're going to add the direct materials. Each time the work in process was debited, we debit the work in process account. So we debited it for materials, we debited it for labor, we debited it for applied overhead. Then we credited it for our finished goods. So this was the beginning balance, materials, labor, and overhead, and what we transferred out. What you have left is a remaining balance. That's the ending balance for the jobs. They didn't tell us what jobs we were working on in this case, but the ending balance is $3,200. And that's all that they wanted you to do for exercise 5.9. So I'm going to stop sharing this for just a moment. I'm not finished with this lecture yet. I want to switch to talking about what would happen if we had some spoiled units. So I'm going to switch this out here, and I'm going to share a new screen with you. And I'm going to go to my spoiled unit notes that I've made up. And you should be able to see the spoiled unit notes that I made up. And I put these in notes too in Blackboard. I think I've got some chapter 5 notes set up in a folder in your assignments in Blackboard. So if you want to get a copy of this, you can, but I'll also post it near where I do the videos in Blackboard. So under Throwers Videos, you should also see where I posted this to your Blackboard course. So first of all, what we need to talk about when we're dealing with spoiled units, and we're basically talking about a job order costing system, a traditional type of job order cost accounting system is what we've been talking about all throughout this chapter. So we can expect sometimes, due to the nature of the production process, that some units might become spoiled. Employees can make mistakes that result in defective units. And defective units that are imperfect can become sellable if we put some additional cost to those. Note, when you try to make imperfect units perfect again, we have to add cost to those units. Those cost of the corrected unit should not exceed the market value or what you think you can sell the product for. If the normal spoilage, which is due to the nature of the production process, is not caused by a particular job, the cost of the rework must be added or debited to the overhead account. Now, I want to emphasize to you that this normal spoilage is not caused by any job in particular. It's just a part of the nature of our production process that sometimes we might have spoiled units. Sometimes employees just make mistakes that result in spoiled units. And if it's not caused by a particular job, the cost of the rework must be added or debited to the overhead account. And then they give you an example. It says, for example, if the rework cost is $50 for materials and the rework labor cost is $60, so we're trying to take those units that were spoiled, and we're trying to add some cost to them that'll bring them up to where we can still sell them, so that where they're still marketable. And so the cost of the materials is $50, and the cost of the labor is $60. Then what they would do is they would debit the overhead cost for $110, which is the total of your materials that would be credited and your labor that would also be credited. So these costs are added together to get the total debit to the overhead cost. Well, when I looked at this, I said, well, wouldn't there be some applied overhead that would go into this calculation too? And the truth is, you could have made a journal entry that looks different than this one and included the applied overhead with the cost of the rework, because not only would you have some materials involved in the rework and labor, you also would have some overhead that should be applied to this rework item. And so notice I put a note here because I really wanted to emphasize this to you. Note the cost of the rework is for materials, labor, and applied overhead, even though they didn't show you any applied overhead in this journal entry. There's no credit to the applied overhead. I'm telling you that you could have chose to credit the applied overhead. You can choose to credit the overhead for the additional applied overhead resulting from the additional work on the units. And so if you did that, then if the overhead applied is based on the direct labor and it's 150% of the direct labor cost, we'd take 60 and multiply it by 150%, and that will give you $90 that would be credited to the applied overhead. Now in your textbook, they show you this journal entry. And in my thinking, I thought we ought to take it a little step further and show that applied overhead. But what happens is, class, if you've got a credit to the overhead account, which you do here for the applied amount, and you've got a debit to the overhead account, these two wash it out. And so what you're left with is just the $50 and the $60 there. So if you choose to credit the overhead account like I did here to apply the overhead, then there's a washout when you post these to the overhead account. And so the overhead account eventually ends up being $110 like they show you in your textbook. And so I just wanted to bring that out to you because that really bothered me that they didn't show you, because you know, when you're working on a job, if you got materials and labor, you got some overhead that has to be calculated too. That's what I've been teaching you, and so I like to show this here. But once it is posted, this credit goes against this debit. It washes itself out, and what's remaining is just 110 that would have been debited to the overhead account. So if the normal spoilage is not caused by a particular job, the cost of the rework must be added or debited to the overhead account. In a situation where the normal spoilage is caused by a particular job, then no journal entry is required to update the overhead. What you're going to do is you're going to add the cost of the rework to the original cost on the job cost sheets. So you still had to rework the item, but you're just going to add it back to the costs that are on the job cost sheet. And then I've given you an example of when this might happen. If the job requires special materials that a customer requests to go in the units that the company is producing for a particular job, and the request for the materials were defective. So in other words, a customer is saying, I want this particular type of material to go into whatever's being produced for that customer. And that material is defective. Then the additional cost will be added back to the job cost sheet. So the total cost of the job will increase, and there will be no journal entry to record it in the overhead account. So the additional cost of adding the new materials to the job are going to be added to the job cost sheet. And these costs will flow through the work in process account as a debit. So the $50 for materials goes into the work in process account as a debit. The payroll or the direct labor was $60. That goes into work in process as a debit. The applied overhead of $90 also goes into the work in process as a debit. There is no extra journal entry to update the overhead account. The journal entry would have been the same thing that we normally do. It's just that the cost would be added to the job cost sheet. Now there's a third situation that could happen here. And that situation is if the spooled units were not expected and they were not from normal operations. So sometimes we can have spooled units that occur that, you know, aren't from our normal operations. We weren't expecting them, they just happened. And in that case, we use an account called a loss from abnormal spoolage. This is a loss account and it'll have a normal debit balance. So we're going to add to the loss account on the debit side. So in the situation or the example from above, if this was spooled units that were not expected, it's not a part of the normal operations, then we'll put it in the loss account. The total amount of the cost to the loss account would be debited for $200. Our materials would be credited for $50, the extra materials that it took. Our labor would be credited for the $60 in labor and our applied factory overhead of $90. All of these accounts are credited, but the loss would be debited. And this loss will show up on your income statement in other items. It's a loss from abnormal spoolage. We want management to know that this didn't happen, that we weren't expecting this to happen. And they might want to examine why that happened and to make sure that that never happened again. But in this case, it's called a loss. And so that's how we account for spooled units. And so it's important for you to be familiar with that because I've assigned a homework problem. And so use these notes to help you with your homework problem that talks about spooled units. And so I'm going to stop sharing this with you today, and we're going to see you next time. Bye-bye.